All right, so guys. So today is Wednesday, and I think the market is still a little bit faltering, especially with the news that we have been actually getting, the new news that we have been getting. So, in case you guys have missed it, yesterday, Russia actually was reportedly partially withdrawing some of the troops away from the Ukraine borders. So the market was actually doing pretty well. I won't say that we had multiple rallies, but most of the stocks basically ended on a high. People were a little bit more optimistic that this quote unquote war is not going to be happening. However, we do have some news today that would be changing some of the information that we do have. But anyway, without further ado, let's cover some news today. All right. So let's look at this. Russia says troops withdraw from Crimea, but U.S. wants Ukraine invasion still possible. So Moscow said Russia's defense ministry said it was withdrawing troops from Crimea following the completion of military drills, as Western intelligence report that Moscow could invade its smaller neighbor as soon as Wednesday. Did it immediately materialize? Of course. From what we actually have as the information that actually came about. The announcement follows statements on Tuesday from Russian President Vladimir Putin and other Russian officers that a small portion of their forces near Ukraine, exceeding 130,000 in total, would withdraw after exercises finish. Okay, so Russia in recent weeks has positioned land, air, and sea forces on three sides of Ukraine and demanded that its leadership and Western allies heed Russian demands that the country never join the North Atlantic Treaty Organization and address other grievances by Moscow. So I think this is more towards a update on it. However, something that is very, very interesting for me which would be NATO, saying that Russia is increasing troop numbers at Ukrainian borders and calls for talks. So, as much as we think that the Russians are actually partially withdrawing a bit some of their troops away from the Ukrainian borders, NATO actually is saying that Russia is actually increasing the numbers of troops. The amassed at the Ukrainian border a day after Moscow claimed it has begun withdrawing some of its military units. So the Western leaders have warned that they have yet to see evidence of such a move after spokesman for Russian Military of Defense announced on Tuesday that some units having completed military drills near the border were already on the move. All right, so for people who are unaware, of course, people will always say that, the Moscow has already announced that they are going to be withdrawing the troops after the whole exercise drills has been ended. Of course, people are also on the side of Russia saying that it does take some time for them to actually withdraw the troops. It's not as if it's going to be a day effort for them to actually get out 130,000 troops away in just one day. So it's of course normal for us to actually be more patient about it and think that this would probably take a month or even like 10 days or even 20 days or so. It's not going to be taking a day. And that's why we are a little bit more understanding on that side of things. However, with this news from NATO accusing of Russia, I think that this would actually bring some sort of tremor and some sort of fear in investors' mind. And I always talk about this a lot, which is fear. And since we are talking about financial content in this channel, I do want to bring the attention to you guys that this is ultimately still some form of level of fear, and the market currently not really that big of a fan. People are not really rallying as much as we thought they would, and that's kind of why the reason people are kind of a little bit more apprehensive after hearing such news, especially from NATO. And like I said before, I do not think that a war, quote unquote war, is going to be breaking out anytime soon, but I am definitely going to be very, very cautious, especially on the investing side of things. All right. So Russia continues the military build-up. The defense minister are due to meet in Brussels on Wednesday to discuss what the military alliance has called the most serious security crisis we have faced in Europe for decades. Speaking to reporters ahead of the meeting on Wednesday, NATO chief Jens Stoltenberg said it remains to be seen whether there is a Russian withdrawal. Of course, a lot of people are actually defending the fact that it takes more than a day for them to do any sort of withdrawal. So it's very hard for you to just be like, oh, okay, there's no withdrawal from the Russia side, so we should just imagine that a war is still going to be breaking out. I think that's also very, very unfair against the Russian side of things. But of course, like I said, caution. Okay. So Stoltenberg has said NATO allies remain ready to engage with Russia, and that NATO was wrong to say there is no evidence of Russian withdrawal from the border, as Reuters reported, adding that President Vladimir Putin has a desire to negotiate diplomatically, which we also talked about yesterday when we had a news article about how the Western countries are intending to actually negotiate with Vladimir Putin diplomatically on the fact that they might be able to find a center way for them to actually get this all out amicably. Okay. So, UK Prime Minister Boris Johnson told Sky News on Wednesday that while the West has seen some positive signs from Russia, the intelligence we're seeing today is still not encouraging, which is exactly what I just said, basically. Because things that, of course, it is good that Russia is trying to do their part to sort of like partially retract some of their troops. However, if this is not like confirmed in any sort of way where we do not see troops significantly getting retracted, I don't think this is going to be good for the market. Of course, people would like to go on top of the fact that we are hoping this is going to get better, and that's hope is not a good strategy. Okay, and I think that that's why you have to practice a lot of caution. Of course, I'm not telling you guys to just go against the market, short the market, and such. But yeah, I think it's definitely going to be a little bit more interesting for us to actually go on from here now. So yeah, that's kind of my thoughts about this entire situation. Okay, so enough about Russia. All right, so no oil rises, stock futures edge down as investors seek clarity on Ukraine. Of course, like I said, the market is definitely going to be a little bit more wary. However, as much as the entire market is wary about this entire situation with Ukraine, oil prices may want to go up, but oil prices did go down a little bit. So if we actually bring up the WTI prices, I'm almost certain that WTI went down to about $90 or so. All right, so yeah, over here you can kind of see how the chart was. All right, in the 5-day chart, we actually went all the way up to $95. And afterwards, we kind of just trend down all the way down to like the $90 mark or so. Yeah, I remember we hit $90 for a minute. Yeah, $90 or so. And then right now it's kind of going back up simply because of the whole NATO news, where people are starting to have this sort of fear in mind that say, oh no, if Russia is not completely out of Ukraine, then prices of oil will still have to continue going up. And of course, we have to also take into consideration that, of course, when oil prices go up, we're also taking big steps at the fact that consumer price would also be affected, because oil do take up a huge percentage of why the inflationary pressure is also in the economy, especially in the US economy. So yeah, I think that's something that we also have to take note of. All right. So that's the retail sales to show consumer appetite for spending amid high inflation. Okay, so if you guys are unaware, I do have a video about this, something along the line of this at least, where we actually talk about the consumer spending and how the whole wage price spiral and such. I actually talk about it in a video of mine. If you want, just go to my go to my channel and just look at the video that I posted earlier today. It's about 13 minutes or so. You might be able to get most of the information that you want, especially about what the Federal Reserve is going to be doing on the 16th of March. And I think that's the most important part of them all. But yeah, I think that this is good, where we're actually seeing more retail spending. But of course, at the same time, I think that this is kind of like the whole the chicken or egg first situation, because right now, if everyone is willing to spend so much money amid high inflation is just going to keep on going up, because if people are willing to spend as much as inflation is going up, inflation is never going to come down, because there's no point for inflation to come down. We need some form of a recession to actually counter this level of inflation. And in order for us to actually do that, it means that people must stop spending for inflation to come down. But for people to stop spending, like I said, you will still need a recession for people to stop spending. It doesn't really make sense for people to just suddenly stop spending, because there's so much cheap money in the system right now. It just doesn't make sense for them to just do so like that. And of course, something that I actually do have a little bit of a thinking about, because I've thought about it for quite some time now, which is that there is the possibility that people are just recklessly spending right now, and people are actually spending more than they should be, because I feel that for myself as well. Like, I think I'm spending a lot more than I should be, and I think that this would somehow spiral into some form of a recession in the near future. Of course, I do see this happening in the next 3-5 5 months or so, where we are actually spending so much money because we think we have enough money. I think, and also because inflation has not necessarily quote unquote affected us directly, and because of that, we think that our money is still big enough, and we spend our money the same as before, however much inflation that we already had prior to the year. And I think that's going to be the issue in the next 3 to 5 months. Of course, I am very, very hopeful that inflation is going to be going down. Of course, I'm not sure when. I'm not sure if it's going to be going down in 3 months, 5 months, 10 months, a year, 2 years, 3 years. But of course, I am hopeful that inflation is going to come down, because I think that's just how the natural progression of things will work. Eventually, something's got to give. And if a recession comes, a recession comes. We'll get out of this hyperinflated economy because no one's going to spend money for like a proper year. And after that, the whole inflation is going to go poof, and we're going to have some form of deflation or disinflation, which I would think the former would be more possible. Which is why I think that that's kind of like my situation with this entire situation and moment. Much of the forecast jump would be because of the vehicle sales. Economists said, excluding autos, a forecaster predicted retail sales rose a more modest 0.8% last month. Auto prices have skyrocketed in the recent months because of the low inventory of the new and used vehicles, high demand and supply disruption, including computer chip shortage. All right. So if you guys have not seen it before, just go and Google. Not Google. Just go to my channel and find this this video called 7.5% inflation, where I actually covered the CPI the minute that it came out. I actually talked about this a little bit, where new and used car prices basically would still be going up, but it's not actually reflected in the CPI because there's such a low inventory of new and used car in the inventory, basically, and that's the reason why we did not see a skyrocket in price in terms of the CPI. However, the price of all these vehicles are definitely still going to be higher. It's just that as compared to what the data said that we actually had in the previous 3 months, 4 months, 5 months, 6 months, it's just going to be a little bit lesser, and that's why the CPI did not really record something that was going up that high. All right. So 2022 is going to feature this very delicate rebalancing act for the entire economy, and in particular for US consumer living in this world where prices are higher and purchasing power is more constrained. And yes, I think that this is a fair point, I guess. Because right now, what they're basically saying is that, like I said before, wage price spiral. When prices are higher, purchasing power would definitely catch up to them, and when purchasing power eventually catches up to the people, the consumer price will eventually go up again, because the more purchasing power that you have, the more prices have to increase in price. Because how it works is basically let's just say company A pays employee A $10,000, okay? And if this $10,000 is all going into consumer pricing, let's just say consumer prices go up to $11,000, and then employee A have to go and ask from the company for an additional $2,000 increment. And when that happened, the company would have to give so many raises to so many employees. The company will basically have to say, okay, you know what, for the services or the products that we're actually providing for the people, aka consumer prices, we have to raise those prices because we have to pay our employee a little bit more. And because of that, this whole thing just kind of spiraled out. And that's kind of why we actually come down to this whole consumer pricing going up, and then we still have purchasing power being constrained. But yeah, I think that's kind of the issue with this entire situation. But I think for the retail side of things, I think I said enough about it. Of course, it's a good thing that we are seeing more people trying to spend money. It's better for the economy in the short term, but of course, in the long term, it's going to be horrible. And I'm not really, really looking forward to it, because when a recession hit, I'm pretty sure it's going to hit very, very hard. All right, look at Bloomberg. Okay, I think this is basically the same thing, inflation concern. And also, later on at about, I think it's at 3 a.m. At 3 a.m., we're going to be getting the January FOMC meeting minutes, and that's going to be very, very important for us, because that's where we actually see most of what's going to be happening, or what has transpired in the meeting in 25th and 26th of January in the FOMC meeting. We do want to check for some tonality of what the Federal Reserve actually talked about. We do want to look at the plot, the dot plot, where we actually can see what is their new projection for where we want to see their new projection for where they think 2022 is going to end up with for the interest rate hikes. So we are possibly looking at 1.25% or somewhere in that direction, of course. And also, let's not forget that we also have to look into the economical projection, such as how much inflation is going to be around as of 2022 and 2023. I think that's going to be very, very important as well. But yeah, that's kind of all for that part of things. I think we don't really have much. Okay, I'll just keep this as the last one. Yeah, basically the earnings side of things. Roblox stocks is sinking. Earnings was worse than expected. I read the entire earnings report for Roblox and it was quite bad because the DAUs were actually down. And okay, well, it's not actually down. It's actually higher than expected. But at the same time, we're expecting a lot more for the DAUs because how Roblox works, how Snapchat works, how Twitter works, anything that has any sort of social capabilities, we look at the DAUs and the MAUs, which is your daily active users and your monthly active users. Those are the important metrics. And of course, Roblox did record good active the daily active users, but I think it's still not enough, and that's kind of the issue why. But yeah, okay, over here you can see fourth quarter net loss of $143 million or 25 cents a share. So Roblox is still not profitable, but we already knew that from the start that Roblox is not going to be profitable. And we were the analysts were expecting net loss of 12 cents. I remember reading something along the line of them actually expecting Roblox to be losing like 7 cents per share instead. But yeah, 12 cents I think is a lot more modest, and even then they lost a lot more than expected, 2 times more, if anything. A film of adjusted revenue preferred by video game analysts rose 20% year over year to $770 million, a tick below Wall Street consensus estimate of $772 million, which, like I said, same thing, not good enough. The company said average daily active user were 49.5 million during the quarter, up 33% year over year. Hours engaged hit 10.8 billion hours, up 28%. So yeah, basically you can tell that it is a good report. But the worst part about this so-called AKA good report is same thing. Revenue is bad again. No, not revenue. The forecast is bad again. And on top of the forecast being a little bit less than better than expected, the situation is that they did not beat their estimate by a lot. And that's kind of the situation with the market right now. If you were to beat estimates on your earnings, you need to absolutely destroy it for you to even make some sort of profit. Otherwise, you're just gonna get sucked out dry. And this is actually quite obvious, especially in Amazon, because Amazon basically had to use Rivian's investment to kind of bring their EPS up to like 7 times more than their estimate for them to actually go up by 10%. If they didn't have that, I can assure you that Amazon is going to go down so much to the point where it's going to be like another Netflix or another PayPal. And that's kind of the situation with the current earnings cycle as it is. Of course, Roblox did kind of go up a little bit. However, I'm almost certain that I checked on Roblox afterwards and it just kept on going down. Right now, Roblox is down 14%. It's crazy because I was actually thinking that Roblox was gonna beat earnings. I thought about buying calls on Roblox, and thankfully I didn't, because I was, like I said before, I'm very, very cautious in this market. I'm not sure if a good earning report is all it takes for us to actually beat the market and actually earn some money. I do not think it that way. I really, really, really am worried about this market right now. So I do not want to play on earnings as much. I think earnings is going to be very, very dangerous, especially for the next few earnings, because we are just that few earnings closer to recession. And I think that's going to be the situation for quite some time. All right. So that's all for Roblox side of things. Nvidia earnings is going to be happening today. I think we should have fund earnings today, which is good because we have the whole FOMC meeting minutes to be coming out anyway. So I think it would be good for us to go through some of the earnings as well. So Nvidia is going to be out today. Applied Materials, Shopify is going to be out. Equinix, Baidu is going to be out. Do we have Kraft? I talked about it as well. Trade Desk is good. DoorDash is interesting as well. Garmin, I think Garmin should be out already. I'll actually check on this afterwards. Yeah, I think that's all we have. So yeah, I think I'll go through all this. Oh, QuantumScape as well. QuantumScape is going to be an interesting one because I do not see them really beating the estimates. But QuantumScape do tend to surprise people from time to time. So we'll see how it goes. I actually haven't been catching up with QuantumScape for quite some time, so we'll see how it goes for that. TripAdvisor as well. Okay. Let's see. Do we have anything else? Yeah, I think that's about it. Oh, Fix. Isn't Fix the doctors scrubs kind of thing? I think I remember reading up on this before, but yeah, whatever it is. But yeah, I think those are the earnings that we'll be having after hours today, and I'll most probably be checking up on those after the FOMC meeting minutes. But anyway, thank you guys for watching, and yeah, check out the new video that I posted on my channel about what would most likely be happening when the Federal Reserve actually released the statement on the 16th of March. But anyway, thank you guys for watching, and I'll see you guys next time.